applause, ladies and gentlemen. Mr. Parekh, you're welcome to take the podium or the mic. Thank you. Thank you. Thank you very much, Mr. Jindal and Mr. Varadkar.
Good evening, ladies and gentlemen. Since CNBC has been very kind to me, I have to be kind to them. It's a pleasure to be here today. This summit is of special importance because it celebrates the landmark of 25 years, as it says here, unparalleled business news reporting. For many of us, CNBC is not a news channel, it's a way of life and an integral part of our daily routine. Once hooked on the channel, CNBC-TV18 is all-pervasive in our homes, in our offices, and anywhere on the go. Your channel helps turn the financially illiterate to literate, startups to stars, sparks new business ideas, empowers with insights, and chronicles every move of the markets. In an era of heightened television media hoopla, CNBC TV18 has for 2.5 decades anchored itself on the principles of trust and reliability. 25 years of remarkable reporting, a leader to excellence, and an unwavering commitment to the truth, fair and unbiased, have been the hallmark one has come to learn, one has come to expect from CNBC TV18. Fact-based, lucid reporting has been your cornerstone. Loyalty, leadership, and expertise has been the integral element of your journey to success. The news never pauses. Every minute there's a feed to report, a soundbite to capture, and a universe in ether to harness. I admire each and every one of you from CNBC for so unstintingly borne the responsibility of bringing to the viewers both range and depth of personalities, newsmakers, and pivotal stories, and so much more. Your presence has been a good service to the nation. Your dedication has been beyond legendary. Kudos for all that, and may there be many more milestones for you to achieve. Typically, at this time of the year, there is much to reflect upon the year gone by and much crystal ball gazing for the year ahead. As far as the global economy is concerned, clearly 24 turned out to be better than anticipated. The big win was that there was no recession. Global inflation came off, and the super cycle election year reiterated that the pillars of democracy are still intact. The fears that AI would sow the seeds of extreme chaos into the 24 elections, widely spreading misinformation and deep fakes, did not play out, even though the risk still exists. The opportunities around generative AI are now better understood. In equal measure, the over-exuberance of AI being a silver bullet is tempering. There is better understanding and better realization now that AI is productive, is an enabling tool, and not one that will render much of the workforce redundant. The rules of the game are still evolving and imbibing. A uniform global regulation on AI governance is critical. For India, for us in India, capitalizing on AI entails raising resources to fund increased energy needs, decarbonizing the grid, scaling up the number of data centers, and building factories for the high-end manufacturing of chips. A few weeks ago, when the CEO of NVIDIA, Jensen Huang, was here, and he aptly said, this is India's opportunity to reinvest itself from the world's back office to the world's front office. and be a leader in AI, because we in India, he said, have the talent and the human resources to do so in India. For us in India, exciting times lie ahead. The heft of being among the fastest growing major economies will continue for some time to come. Fueling this ambition calls for a faster pace of GDP growth and investments. So what we need now is higher GDP growth rate, much higher than what we've been having in the last few years. And for that, we need more investments. Now, where is the investments going to come from? Today, India's voice matters on the global arena. For the West, India is often viewed as a counterbalance for China's growing heft. Yet the characteristic of Indian diplomacy, Indian model of diplomacy, has served us extremely well. This was best being played out with India's increased import of crude oil from Russia in recent times. India's ability to seamlessly pivot to other countries where it can import crude at the most competitive rate. Excellent global relationships, external relationship enables us to make smarter choices back home. Our initiative, India's government's initiative of expanding BRICS, demonstrated its leadership on a multipolar global south. Most recently, laudable military and diplomatic efforts on the India-China disengagement reflects our credibility in navigating more complex geopolitical environment. Evidently, India's future is about attaining scale, attaining increased production. The aspirations of being a $30 trillion economy by 2047 and a per capita income of $18,000 is not inconceivable. It is possible. Because of what are favorable demographics, rising income levels, low penetration of discretionary goods and services, being perceived as a favorable destination for manufacturing and service offshoring, and the significant improvements in physical, regulatory, digital infrastructure have been transformative for India. In recent period, there has been some concerns of a possible slowdown. Here it is important to note to be more discerning with the data. From a wide suite of high-frequency indicators, there will be variations in different points of time. We all know that government spending was curtailed for a quarter during the election time. So this is a timing issue. It is not a structural change, the present slowdown. Central government capital expenditure is expected to gain traction from here on. There were unseasonal rains in August, which fed into higher inflation data, particularly in agri-products. But expectations are that inflation rates will start coming off from December onwards, especially when the base effect becomes more favorable. GST collections were subdued for the months of August and September, but saw a pickup in October. Services PMI strengthened in October, as did passenger vehicle sales, which were subdued earlier. Urban consumption was a big tepid, with a tilt to premiumization, but rural consumption has picked up on the back of a good monsoon. Rather than reacting to small changes, one needs to look for the longer-term trends. Sure, we will have some blips. There will be periods of slower growth in certain sectors, but they are cyclical in nature and not symptomatic of a long-term slowdown. It is also true that recent corporate earnings have been lackluster. Core sector output has been lower, but steel and cement have shown improving trends. Some pockets of the financial sector have had a slight uptick in retail asset quality deterioration, yet it is not a systemic risk. It is important to reiterate that Indian banks, as well all the financial sector today, all the financial sector players today are well capitalized, and corporate leverage is much, much lower today than it was in the past. There are no concerns on the twin balance sheet problems which we saw many years ago. Now the critical issue today is how are we going to fund India's growth? Our growth ambitions are enormous, but who's going to fund it? How is it going to be funded? And what financial transformation is needed to meet the needs of the next generation? In India, public capital expenditure has been at record highs, but there are constraints on spending owing to the commitment to the path of fiscal prudence. In India and globally too, banking sector has been subject to higher capital requirements. Regulators remain cautious of non-bank finance lenders or shadow banks, even though they play a very important and integral part in the financial system. While one respects the domain of regulators, for a few bad apples, invariably the entire financial sector gets penalized with much tighter and higher restrictions and regulations. The reality is that banks are not lending sufficiently to meet the growth of our country. Retail depositors don't feel incentivized enough to save through bank deposits. So banks are struggling to raise deposits. After decades and decades, our corporate debt market are still so shallow. We have many insurance companies now who are asset management expertise, particularly on the equity side. But investment guidelines of insurance companies have for years remained the same, and scope to increasing private sector investment is limited because most of it is taken away by mandatorily investing in government securities, both state and central. Even the market for top-rated companies, top-rated paper is still extremely small. So what is India Inc. doing about it? It is turning to flexi, non-traditional or alternate investments, which typically entails rates of interest which are 4 to 6% higher than traditional norms for banking. Foreign funds seem to be much more confident of lending to Indian companies, which is unfortunate, than the Indian financial sector players themselves. And it is the foreign funds that are making merry with higher spreads. This should not be the case. Globally, deep-pocketed alternative asset managers have increased their penetration in the private credit market, which is currently estimated to be over $2 trillion. Last week, I was in Singapore and I met many investors, fund managers who have been investing in equity for the last 20 years in India. Most of them are saying we are starting credit funds because we see massive opportunities of lending to Indian companies. These will be foreign currency loans to Indian companies. These private credit funds in turn raise money from institutions like insurance, pension funds, endowment funds, which are long-term investors. Private credit typically used to fund small and medium companies. But now private credit lenders are able to cut significantly larger checks. Some say private credit is eating into the space that was traditionally the domain of the bankers. Regulators feel that the risks are high as regulatory supervision is much lighter with alternate assets compared to banks. So what is the way forward? There's definitely a need for increased funding access for mid-level companies as well as large companies. A developed financial sector, a developed financial system needs some amount of flexible funding, some amount of structural finance, some amount of mezzanine finance, and some amount of buyback finance, buyout funding, which we all do not have. If companies get access to timely funding, it helps to overcome unforeseen circumstances. To my mind, the key risk is when credit funds transact excessively amongst each other, because then there is no transparency of what is actually transpiring. Perhaps banks and private credits have to coexist. Some banks and private credit firms have strategic partnership. Here, the bank provides the credit solutions, to their customers through private credit firms. Doing the due diligence, the banks does the due diligence themselves with a fee, and they use the balance sheet of the foreign private credit suppliers. Yet it would be unfortunate if banks and NBFCs curtail lending to sectors that India needs for growth. Several banks have now built up massive capacities and strong capacities in infrastructure lending, but are now reluctant lenders post the twin balance sheet crisis. Good lessons were learned from the crisis, but we should not get paralyzed from the fears of the past, which we are getting. As long as there's no malified intent, lending institutions need to be encouraged to support business growth within the country. I have always maintained that India grows when India builds. We need to build much, much more. Hard infrastructure, soft infrastructure, and especially upgrade our grid and telecommunications infrastructure. Data centers, global capability centers, warehousing, these are all new opportunities for the real estate sector. But banks are not allowed to lend for land in real estate. So if you want to buy land, you cannot go to banks. You have to go to private credit. You have to go to NBFCs. And you have to pay much higher rate. And in urban areas, land forms a major portion of the cost of a building. We need to increase all sources of energy: thermal, renewable, nuclear, hydro, and biomass. For India, it is not about choosing one dominant source of energy, but increasing capacity as quickly as we can. And all the incremental building that India needs to do for future mandatorily needs to be done in a sustainable, green manner. When one looks at retail finance, given the low levels of penetration, the runway for growth is also immense. Let me give you a few examples. Consumer credit to GDP. In India, consumer credit to GDP is at 40%. And it's the lowest amongst the larger countries. In the US, it's 74, but even in China, it is 62. We are still at 40. Mortgage to GDP is low as 11%. In other Asian countries, it is in mid-20s. In US, it is 52, and in the European countries, it is in 90s. Insurance penetration is at 4% compared to a 7% global average. So there are massive opportunities to increase in these financial sector. That's why you have so many insurance companies and asset management companies. We are very excited to see the increase in retail investors, especially those investing in the SIP, systematic investment plans. But it is also important to increase awareness that retail investors should not fret when there is a market downturn. I worry because there's a large cohort of new investors who have never seen market cycles at all. If these investors, it is these investors that one needs to counsel and instill confidence of staying invested for long periods of time. To conclude, I do hope India sees a calibrated reduction in interest rates sooner than later. We should not choke India's growth. One recognizes RBI's inflation mandate, but there are ways around this. When interest rates are lower, households can buy more, businesses can expand production, and the private sector can increase capital expenditure. Alternatively, a small reduction CRR could also help. India will prosper even more if we resolve to have problem-solving mindsets and work collectively to overcome all our challenges. Industry and the government need to collaborate jointly on what needs to change, to be honest about what is broken and what needs to be fixed. It is a promising future and an era of new opportunity awaits us. I'm extremely optimistic about the future of India. And let me again end by thanking CNBC for inviting me and giving me this honor, which I never expected. I was just asked to come and speak, but thank you, CNBC.